Good morning, everyone, and welcome to the Quantum Leap pre-market trade plan setup for February, August the 14th, 2015. My name is Doug McKay. I'm the founder and moderator of Quantum Leap Trading. This is a live subscription room. We come together each morning to take a look at the market, macro to micro, the structure of the market, and then drill down to pick our trade zones and our targets for the day and our hypotheses. Then we do a live trade room during the course of the day. If you want more information, give me an email at quantumleaptrading@gmail.com or give me a call 647-545-8065. Let's just get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. Only you are responsible for trades or investment decisions made. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. Please trade your own plan, and your own risk metrics and past performance is not indicative of future results. Okay, taking a look at the news today, we had Canadian manufacturing sales came out 1.2, expected 2.3, a little bit of a miss there. PPI came out 0.2, expected 0.1, pretty much on target there. Core PPI 0.3 versus 0.1. 9:15 Eastern, we have capacity utilization and industrial production, and then the big one will be the University of Michigan consumer sentiment and inflation expectations at 10. So we do have some scheduled news today, so be careful. I like to start each day with just a basic candlestick chart, looking for where we are within the different trends. The monthly is very much intact, good slope, good separation. We are very much still in a trend in the long term. In the weekly, we have the possible head and shoulder setting up. The neckline is going to be down here around 2037, but it has not set up yet. But keep an eye on that, especially if we don't break the right shoulder high here at 21.26.25. But we do have consolidation, no real trend, but we are trading below the 9 and the 20 on the weekly. On the daily, we do have a start of a downward trend on the daily. We are trading below the 9 and the 20, and we're getting slope and separation to the downside, although it's very early in the trend. Still a little bit more consolidation than anything else. Going down to the intraday to check on trends coming into the RTH trading session, you can see that we are getting a start of a trend down on the 4-hour as well. Things are starting to point down to some levels to the lower side, and I'll talk about that in a couple of minutes. Going down to the 30-minute, same thing with the 30-minute. We do have a naked cross right here, down here up here at 2080. Keep an eye on that. Might rotate back up. Right now, we do have some slope and separation, but we're coming back up and trying to get back above the 9 right now. There's another naked cross down here on the 30-minute at 2059.65. That very, very big key level. We'll talk about that in a couple minutes. Going down to the 15-minute. Again, same thing. We've had this trend down, but we're coming up to test and violate it by testing the 20 SMA. We do have a naked cross right here at 2080.50. Again, pay attention to these naked crosses because you can see they always come back and retest them. It's very rare that we don't close out these naked crosses. We do have another one down here at the 2058 area. 2058.50. Again, very important area down here at that 2059. On the 5-minute, so a bit of a downtrend. If we fail to get above this 77 area and fail from here, we could accelerate the trend down. Going to the 5-minute. We have had a very strong trend down overnight, but they've rolled over, and now we're starting to get the beginning of an upward trend on the 5-minute. So the longer terms are looking bearish. Just a little bit of start possibly rolling over on all these time frames. Keep an eye on that. Now, last night I was doing some homework, and a pattern popped out I shared it in the room, and let me bring it up here. So this is a descending widening wedge, and this is a pattern that is a strong reversal pattern. Now, it hasn't completely set up, and we also had a symmetrical triangle. So what I was doing last night is I was trading off of the symmetrical triangle and waiting for this descending wedge to show up. You can see we've got 1, 2, 3 touches. I'm sorry, 1, 2, 3 touches of the lower line so far. We need to come up and test this line again. But if we do come up and break above the upper trend line of the descending widening wedge, we've got a measured move up into the 2101.50, and I've got a target up there as well at 2101.75. So just keep in mind, excuse me, the symmetrical triangle breakout. The first target was right here at 2076.75. I traded this last night. And we have continuation. The 100% is the 2069.25. But the point of the matter is, this pattern will stay in force until we come down and test this the fourth time. And I don't think we will. I think we're probably going to come down here, chop in this triple distribution, test this 60 level again, and hopefully we hold. And if we do, come up and then bounce from there. So just wanted to share that with you. Let's take a look at the big picture. I didn't put out a ES level sheet. The reason I didn't is none of the levels changed. I mean, the balance has shifted from the yesterday's at 87.50 down to 75, but all the levels are exactly the same. So, you know, just move everything down. The 75 is showing on there. All the levels below are there, and then all the levels above. So no need to put another one out. We can use the same numbers over and over again. So yesterday we opened up and we were looking for that continuation down. We got down to the 2071 area, and then they rotated back up all the way up through to almost 89, and then failed from 89 and came back down and closed right below this 82 level and this 80.50. 80.50 is now getting filled in. So 82.75 now is our line in the sand above, and then our key line in the sand above, and then the other one is the 70 and the 59, and all the levels are the same. Right now, you know, we're trading in around 75. I'm looking for the continuation to come down and test that 70 level again, because that's the measured move on the breakout of the symmetrical triangle. It's also going to be chop in this area between undetermined fair value and the triple distribution zone, and I'm expecting a move, a rotational day in this area, as long as we don't break 82.75. If we get above 82.75, then I'm looking for rotation back up. Now, the other thing I noticed is our microcomposite VPOC here is at 93.50. That's the most traded price going to February the 5th. The 96.50 is the most traded price going back to July the 1st. And then our 6-day microcomposite VPOC is right here at this 2079. But what was interesting, I was looking at my rotational chart. Let me just pull this up. Wrong chart. Is the composite VPOC for the session 31. So this includes the Globex and so it's a full session, Globex and the RTH session. The most traded price going back to the beginning of 2013 is still up here at 2087.50, which is also the other microcomposite VPOC that we've been waiting for that shift to happen. So if we come back up again, I sound like a broken record, we should be in the next couple of days or so. If we trade much more around this 87.50, then we should get a shift of that microcomposite VPOC from February down from the 93.50 area down to this 87. But 87.50 happens to be the most traded price going back to the beginning of 2013. Thought that was interesting. Okay, so let's take our overnight levels. We had a high 85.25. And we had a low at 73.75. See how these numbers just keep popping out, the same numbers over and over again lately. 73.75 is just 2 ticks above the range low, and then our overnight VPOC is 75.50. No surprise, that is the CHVN in this triple distribution zone. And we're currently trading 77. We have an LVN at and the VWAP at 78.25. I'm going to be using that as a trade area. For a move above that, I'm looking for a move back up into close out the naked close at 20.80.50, come back into that 80.50. Now, this is a concept that we've talked about before, and I wanted to mention it again. You can see that our longer term, price acceptance and rejection. We had rejection at 80 here before, and now long-term price rejection has turned into short-term price acceptance as they fight a key level. And that's what happens. So they're filling in that, filling in the auction, and as they fight that level, they fill it in and turn it into a short-term price acceptance or a naked VPOC. Our naked closes there, our VWAP, our midpoint is all up there. So if we get above the 78.25, I'm looking for a rotation up. You can see that on the Keltner center line is sitting right on that 75, and then we've got 78.25 as the 24-hour VPOC, and then above that, test the upper Keltner is going to take us up into that 81 area, and that's right in this area here. So this is very well defined, and I think that you get that breakout above 78.25, you've got a nice little trade into the 80. Below the 75, a move down to the lower Keltner is going to take us down to that 69.70 area, which is very key right now. So we have the value area low here at 74.75. We have a CLVN at 74.25. So that is definitely going to be a trade area. And again, wait till you're below the 74.25 before you get low, short into the overnight low. You could probably front run it, because I think if we get down here, we are going to test the lower side of the come down below the 74.25. We're going to come down to the 71 distribution and test the lower side of that balance here at 70, which is going to be our big target below, our main target below, and our main trade level, for lower price discovery. If we get below 70 again, I think we're going to come down and test this 59 level. And all the targets and everything are all down here. It's all the same. Nothing changes. You get below 70, you've got 66.75. You've got the 64 is filled in. I'm going to change that to 63, which is the 5-day value area low. Excuse me. Sorry about that. So I'm going to change this to 63. And then below that you have 60. Then we have naked VPOC down here at 53.75, 51, 49. Should be 49. And then, 45.25, 40s and 39s, 37.75. We've been through all these numbers, so we don't have to get too deep into them. So above the 78.25, look for rotation, and then above that, you've got the key number here now above is going to be this 82.75. So when we come up here, watch for possible responsive sellers stepping in at the 82.75, even though the value area high is 83.50. So I'm just going to move this up so it incorporates both. And again, remember, same thing, wait for outside of value, so above 83 to get long into the overnight high, and then move back into that 87.50. That's our main target above right now. Well, our main target above is 81, but our second big target above is up at 87. Then 89.50 is that CLVN between the two distribution points, 93.50 and 87.50. So using that as a trade area. And then all these targets, this is not the overnight high, all these targets up here remain the same. You've got 93.50, a little bit of resistance just above at 94.50, and then the 96.50, which is the July 1st till now microcomposite VPOC at 96.50, and then above that we've got the naked VPOC at 98. And we've got naked crosses up there as well. Our ATR targets to the downside right now off the Globex high at 85.25 gives us an ATR target to the downside of 2063.50. Our ATR target to the upside is 95. So these fit in both our scenarios down, based on the structure of the market. So keep an eye on those ATR targets. My hypothesis is we're going to get a rotational day and test this triple distribution zone until we get above 82. So I'm really looking for a range between 82 and 70. Below 70, I think we're going to get further continuation in a flush on Friday afternoon down to test this 59 level. Who knows if we can, how far we can go. In terms of gold, we've found some balance here after the breakout of the symmetrical triangle. Again, anything above 1100, I'm looking for a slow grind up into these upper levels. So right now we're trading 1117.90. We're right in balance right now. I would use this 1112.60 as a key. It's the 3-day value area low. If we get below that, first target is the 1108, second target is the 1100, and then if we break 1100, I'd really be looking for a move down back into balance in around this 1091.40 microcomposite VPOC, and possibly come down even further to test 74.70. Anything below that, I'm looking for a much bigger move down in gold, as you know. And then above, if we can get above this 1123, you can see how the CLVNs right now are lining up with the value area on the current microcomposite. And the breakout of that, I'd be looking to test the range high in the CHVA. And again, up at the 2660 with a little bit of resistance at 29. And if we break 29, I'll move up into the 36 with the big target being where we fell out of balance up here at the microcomposite VPOC up here in 1154.55 area. So that's what I'm looking at gold. Remember, gold stays above 1100. Look for places to get long, and with a move slowly back up into the composite VPOC, going back to 2008, which is up in the 1200 area. So that's what I'm looking at. Keeping it tight today. As always, trade well, trade safe, and we'll catch you on the flip side.